Hey guys, this is Market Update. We have to look at how Bitcoin is reacting this week because this very week we have a potential decision on the ETF. And if it doesn't come, then we could see a potential sell-off in crypto as a little bit of leverage comes out. That's important, especially if you're in altcoins because they are extremely volatile. You can see this data from Will Clemente here, especially with altcoins, they are over leveraged right now. And so if things don't go well, this leverage could just deflate a little bit and you might see a sell-off here. But let's go through that in this video. Firstly, with Bitcoin, man, this chart is absolutely incredible. We are at a massive inflection point, right? And what I want to look at here is what this ETF is going to do to us. The acceptance of this may come this week. It may be pushed out to the middle of January. Either case, for a long-term investor, completely irrelevant. But if you're highly leveraged in a short-term trade right here, of course, there is always some risk, especially with things maybe not happening this week. You can see a little red candle here. We're just starting this week on. Maybe a little apprehension about a potential decision from the SEC this week. Really, the levels that I'm looking at is we've broken through this bear market, right? So that is the pump out of the bear market. And now from here, you're looking at this kind of price level where it's difficult to assume we break through this unless the ETF is kind of imminent or the acceptance of it or a kind of move onwards in the process, right? And so you can see a lot of resistance around this level, around 40,000, right? So you can see that here, but we also have a ton of support around this line here, which was around 31, 32, right? So we flipped that resistance into support at this level. These are the two price levels that I'm looking at, and I reckon it could be anywhere in between these until we get some more clarity on what the ETF is doing, right? So we don't know where that's going to come this week by Friday or maybe January 10th. For right now, though, I think it's important to look at what's happening fundamentally with Bitcoin because it's all happening at once, right? The ETF potentially this week or January, but then in April you have the Bitcoin halving, and then sometime next year you have rate cuts, and everything is showing us that the Bitcoin cycle is playing out as before. So we need to look at really key levels for this cycle because you're playing the cycle now. You're playing Bitcoin going to new all-time highs because if we get the ETF, we get some good news on that, and the Bitcoin halving, whatever happens during that time, I think if Bitcoin breaks this level, right, then it goes to a new all-time high. It's a mentality thing. You're looking at the market saying it was at 15. You have all that bearishness, but we break through the bear market and then we break through this resistance. When Bitcoin is sitting up at this level, whenever that happens, the mentality of the market is this thing's going to a new all-time high. And so you want to be in for that ride, and you certainly want to be accumulating, if any, during that time, any sell-offs occur or any, little bad news flow or anything like that. So that's what I'm looking for. We're playing this, right? We're playing the Bitcoin price to get to 40 or 50 and it goes to a new all-time high. But obviously things are slow and things have to happen. But it's important because time is running out. The price is getting up there. So any weakness, I think, want to buy. Time is running out for this cycle, but it's playing out and we're just waiting for the chips to fall in place. If you're a trader, check out Bybit. Just make a deposit on there and trade. You can get up to 30,000 as a deposit bonus. Just check the details via the link down in the description. Now I want to look at some more fundamentals here because if you are coming back into crypto, and I've seen a lot of new people coming in, the price goes up and people are, trying to come in. We're still at the bottom end of the cycle, which is good news if you're looking to accumulate now. You don't want to be looking to accumulate at the very top end of the cycle. So that's good. But obviously Bitcoin needs to have some fundamentals to push it higher, right? Why are you paying 30,000 now? It's because you think in the future it's going to be 40, 50, 60, 100, right? So is it going to do that? Well, this is from Jamie Coots. This is risk adjusted returns. So we're looking at the Sortino ratio here, which is a ratio that just tries to give us an idea of, is an investment worth the volatility? Because volatility is good as long as you can handle that volatility, because without volatility, you don't get price moves. And if the price doesn't move, then you can't make returns. So volatility and performance are part of the same thing. You want volatility to make outsized returns if you can handle the volatility. But of course, if you just have a lot of volatility and the price doesn't go up commensurately, then it's not a good risk-adjusted investment. Bitcoin, you can see, is number one here, right? So it's not just the price gains, it's the price gains, the volatility. The volatility is worth it, essentially. You're paying in volatility for extra performance. So over the last 1 and 2 cycles, Bitcoin's Sortino ratio is 1.55, outperforming everything else. I would say look at 2 to 3 cycles really, because 1 cycle is not a long enough time frame. Bitcoin outperforming the Nasdaq, gold, S&P, global equities, 60-40 portfolio, absolutely everything. It is the best risk-adjusted, large-scale investment that you can make, according to every observable fact. That's just a fact. And so you either want to get it or not. You need to be buying towards the bottom of a cycle. That's great. But even if you aren't and you're buying towards the top of each cycle, if you have a long enough time horizon, which is 2 cycles, so let's say 8 years plus, then it is still Bitcoin versus anything else, because we would expect to be continuing to going to new all-time highs as the network grows. And I'll show you that data now. The Bitcoin network is still growing. Other networks as well. Ethereum is growing. And when bull markets come back, altcoins do very well as they are, relatively smaller and, can have a relatively larger move given a percentage move in bullish activity. Anyway, this is Bitcoin. What I want to show here is this is active address growth, right? So how many people are coming to the network? New address growth. What is that activity? That has to be going up. If that isn't going up, do not invest in it, because the network isn't growing and therefore the value isn't coming in. Previous bear market, you have a moving average of active address growth around 700K, anywhere from kind of 600 to 700K. In this bear market, just moving out, it's basically 1 million. So that's a big move from one bear market to the next. So what we're seeing is genuine growth. This bear market to this bear market, massive growth in active addresses. So the network is fundamentally growing, which means that we can assume that the price is going to go up. That is why Bitcoin was designed. So as long as you see this address growth happening, that's good news. And it has been. So that's the first thing. Second thing here is active addresses with at least 0.1 BTC. Again, it's pretty much an all-time high. So that shows that more people are coming on board. The Bitcoin is being spread out over more addresses. So, let's say we have 100 to 200 million users of Bitcoin right now. That's going to go to 500 or 1 billion. We don't know where things are going to top out, but you just need to know the direction, right? You need to know that Bitcoin is being brought into more addresses, more people using it. Everything is saying that that's the case. That's the fundamental that needs to happen for a price rise during the macro price cycles, right? So you have a price cycle every 4 years. The only thing that we need to know is to go to a new all-time high, you need the network to grow. You can't have one without the other. It is growing. So that's the important thing. If you're looking to buy now and thinking, should I or should I not? The network is growing over time, which is the main thing. This is hodl waves, and you can see during each bull market right here, you get short-term investors piling in. That is the time when Bitcoin tops out. And so that's really not the time to be investing, because that is the peak of a bull market, not the best time, right? You want to be investing during times where most people are asleep, doing something else or whatever. That's when price is going to be the best, considering we have a low in price, but the network's still growing. That's the best time to invest. Worst time to invest is up here, unless you have a very long time frame. But obviously the best time to invest is the lowest price. You can see here, we are still not anywhere near a raging bull market, right? We're coming out of that. It's very, very clear we're coming out of it with some ups and downs and some volatility. But it's very, very clear that we're coming out of a bear market. And, it's still time to accumulate right here. We're not up here. We're not in the huge expansion. That's going to come later, usually a year after the halving, sometime like that. So we're still in accumulation here. We still get volatility here, but it's all here and it's running out, right? We have huge network growth. We have price accumulating. We have fundamentals with ETF and halving and potential rate cuts. It's all here, and that's why people are positioning. So time is running out for this price cycle, or if you're a long-term investor, you just have to look at this stuff, right? You just have to look at addresses and the amount of Bitcoin that's going into new addresses, which is at all-time highs and seemingly not stopping. I have absolutely no idea if the SEC are going to approve things this week or January. My base case, as it has always been, probably for the last 6-8 months going with the ETFs, is that Gary Gensler is a Democrat, and he is going to time this perfectly to coincide with the election run, because that's going to be great for all of the Bitcoin holders. It's going to show that the regime is, pro-innovation. They're going to pump it and say, look what the Democrats did for you, vote for us at the election. So that's how I think of things. I think they're going to time it very well, that that's going to be happening. So maybe next year, right, with the election next year. That's kind of my base case, is that they're going to use it as some sort of political football. It's going to be volatile in between, but I think the direction is pretty clear at this point, given that the court in the States said that the SEC needs to approve this. So for right now, they're going to approve it, but they're going to time it for their own benefit. That's my opinion anyway. If you're a trader, check out Bybit. $30,000 deposit bonus if you deposit and trade on there. Also, you can check out the Crypto Investor course with my latest research. I'll be updating it towards the end of this year with some new research and my strategy going into next year, because next year is usually a very, very good year for Bitcoin in terms of the Bitcoin halving. So you can check that in the link below as well. I'm James, this Money CG. Cheers for watching, and I'll see you in the next one.